Welcome to Wealth Creation Series, where we learn and grow together with one goal, the goal of creating wealth. If you like this video, please hit like and subscribe to this channel. Welcome back. In the first segment of episode 3, we will cover the latest news, and in the second one after that, we will see how I select stocks to invest in. So let's dive in. There's been a lot of news this last week, which we are going to cover in this episode. First, we have the Tesla stock, which crossed 1000 mark, and then the job reports, which came in this week. After that, the highest number of coronavirus cases recorded in Florida in a day. And after that, mortgage rates, which fell to a new record low since the 1971. So Tesla stock broke today the $1,000 barrier on the expectation of a profitable quarter and its inclusion in the list of S&P 500. An email was sent by Elon Musk to his employees was leaked. This email said, "Breaking even is looking super tight. Really makes a difference for every car you build and deliver. Please go all out and ensure victory." This email, which got leaked, pushed many investors to believe that Tesla was going to achieve its delivery goal and make another profitable quarter. As we see here, Tesla already made profit in its last 3 quarters. If it's able to pull off another quarter in profit, it could be included in the S&P 500, as that is one of the main requirements for a company to be included in this list. That would mean that many mutual funds and ETFs, which would buy the index stocks, which would further push the price of the stock up. This is not the first time emails have been leaked from Tesla, especially when you consider that the emails were sent to all employees. Nor is it the first time Elon sent emails to employees at the quarter, giving them hints, which in turn kept pushing the stocks higher. Today, Tesla's shares soared about $1,200 after the automaker said it delivered about 90,650 vehicles in the second quarter. This despite the close down of the plants earlier due to the pandemic. Market cap exploded to roughly $222 billion, roughly 20 billion more than Toyota. Toyota, which is the largest manufacturer of cars in the world. People have clearly put a lot of faith in Tesla. Florida's COVID cases rose to about 10,000 a day this week. Even with such staggering numbers and with the news of cases going just up, it did not stop the stock market from going up. This was because the job report which came in this week. The economy added 4.8 million jobs last month and the jobless rate fell to 11%. The economists were predicting the rate to be somewhere near 13%. This shows that people are getting back to work as states opened up businesses. All this news has created optimism in the stock market. Today we'll talk about dividend investing and especially how I screen the stocks in which I invest. I am a big proponent of dividend investing. I feel that there have been a lot of studies which have been conducted on dividend investing, and I think almost each and every one of them shows that dividend with the power of compounding interest over time yields great results, maybe even better sometimes than growth stocks. And that is the reason why I invest 90% of my at least 90% of my portfolio in dividend stocks and 10% of them in growth stocks. Because and the growth stocks which I have, I only buy them when I think like there's a significant upside to them, there's a significant upside potential. So most of my core investments are scripts which are giving me dividend year after year, month after month. Of the portfolio I have of over 40 stocks in my account, you can see, by the way, you can see these stocks with the link I have put down in the below the video. You can see, you can go through each of my stocks which I hold, and each of the categories I have created, and I just kind of keep on investing over time. As every monthly I kind of put in money and invest. There are slow months where I would not put money, like right now when I think the market is over right now overvalued. But otherwise, when the stocks will, let's say how the market was during the month of March, I invested a lot of money then because I saw a significant upside at that time. But back to dividend investing and how to select these scripts. Let's say you are new to the stock market investing game and you have selected two companies and you are kind of narrowing it down to which company you want to invest in. First of all, you need to diversify because diversification is always important. However, if you are now kind of down to say two very narrow and competitive companies, this is how I would go about selecting the stocks in this market. Research, and you've narrowed it down to two companies. Let's say for comparison, you have one which is the Coca-Cola company and other one which is the Pepsi. Now, you would want to know which one is better to invest in at the moment, which one will give you a better return, or is a more or the valuation is more realistic just now, and which has a better potential. So for this demonstration purposes, I'm using the website Seeking Alpha. So all you go there and type in the symbols over here in the search bar, and you'll end up at the summary page. After coming to the summary page, you go down to the financials over here and select company overview. In the overview section, you'd come to know what the company is all about. You'll get to know a little bit more about the company. So for example, over here it says the company, in the company profile, it says the Coca-Cola company, a beverage company, manufactures, markets and sells various non-alcoholic beverages worldwide. The company provides sparkling soft drinks, water, enhanced water and sports drinks. You know about Coca-Cola and the different products they have. So then you move over to Pepsi, and over on the Pepsi's company profile, you see that it also operates in the beverage section but also in the food. So now this is where you see the difference between the two, because Coke is almost like a pure play on beverages, while as Pepsi is also operating in the food sector. Over here you can see down that there are many brands which fall under the Pepsi umbrella. They're like Cheetos, Doritos, Tostitos, Aunt Jemima, Captain Crunch, Quakers, Chewy, Diet Mountain Dew, etc. So now you know that these are two companies have two different products, or at least a major part of it is different. So then you'd want to go to the dividend section out here. When you go to the dividend section, you will see that Pepsi is providing a yield of 3.9%, and it's been growing dividend for the last 48 years. The payout ratio is 76.89%. It is on the higher side, but when you go back to Coca-Cola and see the dividend section, you'll actually see that their payout ratio is even higher at 87.42%. Although they have been giving dividends since 57 years and the yield is higher, but at the same time you'd want to also keep an eye on the dividend growth. Over here you can see the Coca-Cola's dividend growth is about 2% for the year, 3%, 4.55% for 3 years, and 5% for 5 years on the average. When you go over here to Pepsi, you can see the numbers are much higher. This shows that the dividend growth of Pepsi is at a much higher rate. Pepsi is growing its dividend at a much higher pace than Coca Cola, and this to me seems attractive because not only it's growing the dividends faster, it's also the payout ratio is also not as high as Coke. At the same time, you can see over here the dividend growth history. It's continuously going up and increasing and in a nice way. So then we can go over here to dividend history and see. Even over here you can see that Pepsi has grown its dividend quite steadily over the past 40 or odd years. And you can see that it's climbing steadily and nicely. When you go to the Coke, again, when you go to their dividend history, you will see even they have been growing their dividend steadily. So both of them are good dividend paying companies. However, Pepsi's growth rate is much more higher. Market cap. Both Coca-Cola and Pepsi are in the ballpark of around 192 billion, with Pepsi being just 10 billion short and behind Coca-Cola. However, you need to dig in a little bit deeper into the financial statements of both these companies to get to know more about what kind of profits they are generating. So when you go over here under the financial statements for Coca-Cola, you see that their profit, which has been steadily going down, or you could say stayed the same in the last 4 years or so. While as in Pepsi, you can see this number increasing right over here, going from 34,000 up to 35 and 37. At the same time, you should know that Pepsi is has a smaller market cap. However, when you see over here that the profits generated by Pepsi are a lot higher than Coca-Cola, so so as a company, Pepsi is making more money even though their market cap is smaller than Coca-Cola. The summary page of Coca-Cola, you can see over here that it's being traded at a PE of 23.89 and Pepsi out here is trading at a PE of 24.88. Both of them are all near identical, but at the same time, both of them are quite richly valued, which means that they are commanding a premium in the market, which is kind of expected because both of these companies are doing really good and both of them have a good track record of dividend paying over here. So it comes down to two things out here. One, knowing that Coca-Cola is a pure play on just beverages, while as Pepsi is not just beverages but also food, and people, as you know, need to consume food in order to live. And so the pandemic is which is going on just now should not put any lower demand on Pepsi, especially because they have like food and beverage, so I'd probably be leaning more towards it. At the same time, when you go and check at the dividends, the Pepsi is paying a little bit less dividend at 3.09, whereas the Coca-Cola is paying a dividend at 3.66, a marginal increase, but at the same time, like we saw earlier, the payout ratio is much higher and the growth rate is much lower compared to Pepsi. So at this point, if I had to put my money, I'd put in Pepsi for sure because it's kind of a toss up, but I'd prefer Pepsi way over than Coca Cola. Alright, so this is it for this week. I hope you liked this episode of the Wealth Creation series. I will bring in more ideas for financial success next week. If you did like the video, learn something new, or just enjoyed listening, Please give me a thumbs up by pressing the like and subscribe button. I make these videos for entertainment purposes only. I am not a licensed advisor. Please do your own research before investing.